Very good evening, everyone. Let us start the live doubt session, day 3. How are you all? First, can you let me know whether the voice is audible or not? Is the voice audible or not? Everyone. So can we start? Okay. Now, the first doubt has been asked from Mani Kanta. How are you, Mani Kanta? Dear sir, in days 2, while considering contract price while calculating NRB instead of market sale price, can we take both cancelable and non-cancelable contract selling price? And when should contract exist either at before reporting date or before approval of financial statement following Ind AS 10? Now just try to understand what Ind AS 2 says. On 31st March, we need to estimate NRB. NRB means what? Estimated selling price minus estimated selling expense for the finished goods. This become NRB. Now the question is that how to determine this selling price. So what Ind AS 2 says that if there is any binding agreement means firm contract means the contract which is binding by both the party. So which should be non-cancelable contract. If it is cancelable contract, then there is no binding element in that. Correct now. So of course when you are saying cancelable contract, so cancelable contract is not enforceable by law also. I hope you are understanding, which can be cancelled. I hope you understand. It become enforceable when it become a contract when it is enforceable by both the parties. I hope you are understanding. So we should only consider the contract which is binding on both the parties. Means we'll take only which contract which are non-cancelable contract. Non-cancelable contract. Understood? This first doubt you have understood. The first preference will be given to the sale price on sale price based on any contract any contract on 31st March. Now one more that you have asked, that if suppose we have done one contract to sell the units which are available on 31st March after balance sheet date but before approval of financial statement, of course that can be also considered because Ind AS 10 will be applicable on that. So any sale price of the contract which has been made after 31st March but before approval of financial statement can be also considered. Your doubt over? Manikanta, is your doubt over or not? Bolo. Have you understood? I think you have understood. Let me explain the second point. The second preference is what? The first preference will take sale price of the binding contract on or before 31st March. Of course, if you apply Ind AS 10, so we can also take the sale price of the contract which is binding contract after balance sheet date but before approval of financial statement. Second point is what? Second preference is what? Any sale made before approval of financial statement. Any sale made which is before approval of financial statement can be also considered to determine the estimated selling price on 31st March. And the last preference will be taken by taking general selling price as decided by the management. So last preference will take the fair estimation given by management based on the general selling price. Got this point? Yes, sir. Coming to next out of Haridarshan. Sir, can you explain the concept for sale to or purchase from joint operation transaction. Joint operation transaction. Of course, yes, I can explain. Why I will not explain? I am there to explain this point only. Now just try to understand. The topic is what? Ki there can be accounting. There can be some transaction between joint operator, joint operator, and joint operation. This transaction can be of two type. Either it can be sale transaction, means joint operator has sell some goods or asset to joint operation, or has purchased some goods or asset from joint operation. So what will be the accounting treatment in the books of joint operator that we are going to discuss in the separate financial statement and consolidated financial statement of joint operator. This is the point of discussion. Let me come to the first. The topic is what you can see: special transaction with joint operation. First is what? Accounting for sale or contribution of asset to joint operation in separate and consolidated financial statement of joint operator. What India's 111 says. First, let me discuss that. What India's 111 says. When a joint operator sells or contribute any asset to the joint operation, it is in effect transacting with other party to the joint operation, and hence the joint operator shall recognize gain or loss resulting from such transaction only to the extent of other parties' interest in the joint operation. Let me take one example. Suppose X Limited has done investment to the extent of 40% in XY Limited. So there is one more joint operator, then name can be Y Limited. Understood? So this become a joint operation, and this X Limited is joint operator. Joint operator. Understood? And X Limited has sold one goods whose carrying amount is suppose 100 lakh, and the sale price is suppose 80 lakh. Suppose 80 lakh. So they have sold at a loss of what? Loss of 20 lakh. Loss of 20 lakh. Understood? Correct. So what will be the accounting treatment in the books of X Limited? Can you say when the sale has been done? So actually this become a purchase transaction for joint operation. Purchase transaction for joint operation. So of course, can I say cost price for joint operation will be 80? But can I say out of this once again will be transfer how much to X Limited? Means X Limited X Limited has only sold the right, has only sold 60% of its right, because can I say 40% will once again come back to X Limited. Means 40% of this asset will be once again recorded in the books of X Limited. Means they have only transferred the asset to the extent of 60%. To the extent of 60%. Means what journal entry they will do? Ki journal entry what? Bank account debit 60%. How much? 60% how much? That is 80 lakh ka 60% how much? It will be 80 into 60%, that is 48. Understood? To asset asset will be also 60%, that is 60, and they will recognize the loss only to the extent of share of other party. Understood? So that is what? The loss will be 12 lakh. This will be the accounting treatment. Have you understood? But just try to understand, because now they have retained how much? They have retained 40 lakh. And the sale price is how much for 40%? So 80 into 40% how much? 32. So can you say there can be some indication of impairment? So what India's 111 says after that? What they are saying? When the above transaction provide evidence of the reduction in NRV they have used for inventory to be sold or contributed to the joint operation. Understood? When the above transaction provide evidence of reduction in the NRV of the asset to be sold or contributed to joint operation or of an impairment loss of the asset. Impairment loss they have used for PP, etc. This loss have been recognized fully by joint operator. So if there is an evidence of what? Impairment. So just write it down. After this you need to find out, is there any evidence of impairment? Is there any evidence of impairment? If I will say yes, if the answer is no, can I say it is quite possible the sale price, the sale price may be equal to fair value. So if I will say sale price is equal to fair value or NRB, are you getting what I am saying? Is the sale price is equal to fair value NRB, then can I say it is an indicator of impairment? In that case, they will recognize the entire loss, means they will recognize the entire loss. So how much they have not recognized? They have not recognized to the extent of their share. So they will also recognize 8 lakh. 2, they will pass one more journal entry, loss account debit to asset. But if there is no evidence of impairment, means sale price is not equal to fair value or NRB, so it means it is not a case of impairment. So it is quite possible that fair value is actually more than the carrying amount. So there is no evidence of impairment. So if there is no evidence of impairment, then no further journal entry will be recorded. Understood this point? Have you understood this point? Haridasan, have you understood? 1 minute. Okay. Okay, nothing, no issue. So come to that live stream. Okay. Okay. So come to that live stream. I will change. Now happy? Okay, sir. Now okay. Now coming to what I was saying, everyone. So everyone come to that day 4 live stream by mistake. Instead of day 3, I went to day 4. Okay, sir. Chalega. Yes, sir. Now coming to the next point, means this was the sale transaction. Now let us come to the purchase transaction. Let us read what they have given. Accounting for purchase of asset from a joint operation in separate and consolidated financial statement of joint operator. If there is a purchase transaction from joint operation to joint operation, means if there is a purchase transaction from joint operation by joint operator, understood? So when joint operator purchase any asset from joint operation, it shall not recognize the share of gain or loss until it resale those assets to a third party. So they will not recognize their share of any gain or loss until it is sold to any third party. Let me take one example what they want to say. Correct. Suppose X Limited and XY Limited. X Limited has purchased, means XY Limited, the carrying amount of the asset, let's say it is 100, and they have sold the asset at rupees 80. So in that, in XY Limited books, there is a loss of how much? 20. Understood? So they have purchased, X Limited has purchased. So can I say they have purchased, X Limited has purchased, so they will only recognize the asset to the extent of their share, means it is 40%. So can I say, just try to understand, just try to understand, कि right now, कि out of these 100, already 40% is recorded in the books of X Limited. So already 40% is recorded in the books of X Limited. Now they have purchased 60% of other party shares. So what journal entry they will do? Ki asset account debit. So 80 into 60% how much? 48. Correct. To bank how much? To bank 48. To bank 48 means in their books, in X books, already 40, already their share was coming, so 40 rupees was already coming. Now we have also add, we'll also add 48, means now in their books of account it will come 40 plus 48 means how much will come? 88. Understood this point? Correct. So you can see what they have mentioned. When a joint operator purchase any asset from the joint operation, it shall not recognize its share of gain or loss until it resell those assets to the third party. Means to the extent of 40% will not recognize any gain or loss. Only we recognize gain or loss only to the extent of about 60%. So you can see we have recognized loss, means out of 60 we have only recorded 48. Means we have not recorded about 12. So that loss is already recognized. So they will pass only this journal entry in their books of account. Have you understood? Hare Darshan, your doubt is over or not? Yes, sir. Chalo. Correct. Now coming to Bibek. Coming to Bibek. Sir, in consolidation chapter, in case of payment of dividend by subsidiary credited, once again, in consolidation chapter, in case of payment of dividend by subsidiary credited to profit and loss account is not adjusted, but if credited to retained earning of parent, not adjusted. Why, sir? What you have said? Once again, I will read. Sir, in consolidation chapter, in case of payment of dividend by subsidiary company credited to PL account is not adjusted, but if credited to retained earning of parent company, not adjusted. What do you want to say? I am not able to understand. देखो, just try to understand. Any dividend declared by subsidiary company will receive by parent company. I am just explaining. Any dividend which is declared by subsidiary company will be received by parent company. So in SFS of parent company, such dividend received will be transferred to PL, and from PL it will be transferred retained earning only. So in SFS of parent company, it will be transferred to what? PL, and from PL it will be automatically transferred to what? Automatically transferred to what? Retained earning only. Now what is your doubt? I am not able to understand, Vivek. Sir, in consolidation chapter, in case of payment of dividend by subsidiary company credited to PL account is not adjusted, but if credited to retained earning of parent, not adjusted. I am not able to understand your doubt, Baba. But have you understood? In case of SFS of parent company, in case of SFS of parent company, it will be transferred to PL, and from PL it will be transferred retained earning of parent company. Now coming to consolidation adjustment, I will explain what we do. When we prepare SONA, yeah, when we prepare analysis of profit, so can I say first we calculate profit of the year, so we do closing balance minus opening balance. This is closing balance minus opening balance. This is nothing but profit after dividend. So what we'll do, we'll add all the final dividend paid, and after adding the final dividend paid, this become profit for the year. This become profit for the year. Profit for the year. And if there is some, suppose the shares were acquired during the year, then out of this profit, there will be some pre-acquisition profit and there will be some post-acquisition profit. Understood now? So that you need to allocate as per the time ratio given. Time ratio of pre and post-acquisition profit. This become analysis of profit. Understood? Have you understood this point? Now we'll prepare statement of net asset. In the statement of net asset, we write down date of acquisition, then date of consolidation, and then post. Now when we write down, first we write down equity share capital here. Equity share capital, I think no discussion required. Now coming to PL. So in PL we write down opening balance. So we write down in the date of acquisition we write down opening balance plus what? Pre-acquisition profit. And in post acquisition we write down post acquisition profit. Post acquisition profit. Understood? So this become what? The INA, if there is, let us assume there is no fair value adjustment given, so this become fair value of INA on the date of acquisition. Correct? Now you can see this is the post acquisition profit. Okay, this is the post acquisition profit before dividend. This is post acquisition profit before dividend. Correct? And now this will be allocated to parent company and NCI in the, as per the ownership ratio. Let us assume it is 70% and 30% will be allocated, which will be transferred to retained earning. Now when we do the working note of other equity, the retained earning, so first we write down retained earning and NCI. Correct? We do retained earning and NCI. So first we write down balance. In the balance we write down first the balance from parent company balance sheet, and this will be NCI initial value. This much have you understood? Vivek, this much have you understood? First, can you reply yes or no? Bolo. Correct? Now from this what we'll do? We'll do minus dividend received. Dividend received. Now dividend received was actually credited to PL. Actually credited to PL, and from that PL it has been transferred retained earning. Means this retained earning is inclusive of dividend received from subsidiary company. So we are eliminating that dividend received from parent company SOPL. Why? Because this is the dividend received from the group company only. So that should not be the income. We are just cancelling it. So whatever dividend received by parent company will be now cancelled. Understood this point? And then we'll add post acquisition profit. That share will be added. I hope this will help you in clearing your doubt, but actually I have not understood what you want to ask. So only based on my understanding I have explained. Vivek, chalega? Is there any other point? You just inform me. Coming to Jacob, Saju. Sir, I could not find the case study MCQ in Telegram channel you mentioned. It is given in Telegram channel. Just go and click pinned message. So there is one point given MCQ case study. You will get all the case study. Correct now? Understood? You will get it. Then Manikanta, guys, please message on live 3. No. Okay, now you message here only. Jacob Saju is doubt solving session for every day. Yes, it will be every day till the point you have doubt. Correct now? If no one is coming, then how can I will take doubt? Like, is there last date for the session? There is no last date. If I will find that no one is coming, then I will stop it. So these sessions are very helpful. Thank you very much, Jacob. Hare, sorry, okay. Jacob Sanju, okay. Could you explain the concept of DTA and DTL as per India's 12? You want the entire concept? Oh my god, I will say just watch my marathon lecture. For India's 12, you will get the entire clarity. I can't explain in the doubt session the entire concept of DTA and DTL. Then I need to take the revision class of India's 12. So I will say, Jacob, just go to my marathon revision lecture. you'll get the in the playlist, correct now, for May 2025 term. Just these all the chapters revision lecture has been given, just watch that. Okay, Jacob. Okay. Now Vivek, sir, OCI concept, both reclass OCI and no non-reclass OCI in detail. Now just try to understand, there are two type of OCI component, one which is reclassified to PL, one which will not be reclassified to PL. Understood? That depend upon the particular Indias which will be reclassified, which will not be reclassified. Correct now. Right now, don't ask me the logic why it is reclassified, why it is not reclassified. But you need to only understand the OCI are of two type. One which will be reclassified to PL. One will be not reclassified to PL. Understood? So what do you mean by this reclassified to PL and not reclassified to PL? Whenever the respective, relevant asset or liability, respective asset or liability is de-recognized, so then their accumulated gain in the separate component of equity, correct now, will be transferred from OCI to PL. I'll just take one example. Suppose there is one, you have done some investment in debt instrument, so it has been reclassified, sorry, it has been classified as FBT OCI, fair value through OCI. Now in that case, OCI is reclassified to PL. Now if you have sold such investment, then on derecognition debt, the accumulated gain or loss will be reclassified from OCI to PL. Correct? Means, suppose there was initially gain. When there was gain, what journal entry you have done? You have done one journal entry, investment account debit to OCI, and this will be accumulated to a separate reserve. We can call it FBOCI reserve. Suppose 10,000. So every year, can I say, you will do measurement. So there can be gain or loss. This gain or loss will be accumulated through OCI in FBOCI reserve. Now if you have sold the investment, so this accumulated gain or loss will be reclassified from OCI to PL. So what journal entry will do? OCI FBOCI reserve account debit to gain. This will be gain, and this gain will be transferred to PL. How much? 10,000. This journal entry have you understood? This journal entry have you understood? Yes, sir. Similarly, if it is not reclassified to PL, if it is not reclassified to PL, so on derecognition of respective asset or liability. I am saying respective asset or liability. Why? Because for respective asset or liability, different Indias will permit to transfer the gain or loss to OCI component. For example, if there is a property, plant and equipment, India 16 says that revaluation gain will be transferred to OCI and credited will be credited to OCI as revaluation surplus. So I am saying respective assets and liability. Now let me take example of PP only. Now when there is a revaluation gain, what journal entry you will do? The journal entry is PP account debit to OCI revaluation surplus, suppose 10,000. Now on derecognition of such PP, now entire accumulated gain will not be reclassified to PL. In that case, the entire accumulated gain will be directly transferred in earning. So in this case, what journal entry will do? Will do revaluation surplus account debit to retain earning. To retain earning means ultimately the effect remains same. Ultimately the effect remains same in the balance sheet. You can see here also through PL it will go to retain earning only. Correct now. Ultimately the effect in the balance sheet remains same, but the presentation will be different. In this case, this entire reclassification has been done from statement of PL, but here directly One equity will decrease, another equity will increase. But ultimately the effect remains same because the accumulated gain or loss will ultimately be transferred to retained earning only. Have you understood this point? Bolo. It was Jacob. No, it was not a Jacob. Bibek. Is your doubt clear, Bibek? Bolo. Yes, sir. Then Haridasan, in case of CFS, what will be the effect if the dividend is declared before the acquisition? Now just try to understand. Normally, this type of question they don't ask. Correct now. Normally, this type of question they will not ask. I will say whenever dividend is declared before the date of acquisition, before the date of acquisition. Understood what I am saying? So in that case, so let me take one question only. Let me take one example. Suppose this is the date of acquisition, and this is 1/4, and this is 31st March, and this is 30th June, and dividend was declared यहाँ पर. This dividend was declared यहाँ पर. Now dividend has been declared from this point of time. The dividend has been declared from this point of time, so it will not be received. It will not be received by parent company. It will not be received by parent company. Dividend declared after acquisition will be received by parent company. So normally whenever question is silent, we'll always assume dividend is declared after the date of acquisition. And normally in this type of question, they will give you dividend after the date of acquisition only. But suppose this was given, correct now. In that case, when you are doing analysis of profit, so can you say for retained earning, what you will do? First find out profit for the year, so you will do closing balance minus opening balance. In this you need to add final dividend paid. Correct. So this dividend will be added to this, become profit after profit before appropriation, before dividend, profit before dividend. Now this will be allocated to pre-acquisition period and post-acquisition period. So this AOP remains same, but only you need to do some adjustment in SONA. Now in case of SONA, when you are doing date of acquisition and date of consolidation and post, so what you are writing यहाँ पे equity share capital, you are writing equity share capital, and you are writing retain earning. So retain earning means you write an opening balance plus pre, and here you write on post acquisition profit. Have you understood? So this become the SONA, statement of net asset. So this become what? Net asset. But can I say this net asset will be before payment of dividend, but we want on the date of acquisition after payment of dividend. So in this case, what you'll do? Just minus dividend from pre-acquisition, correct? Or you can take this pre-acquisition profit after dividend, or directly take pre-acquisition profit after dividend. So you need to be थोड़ा सा conceptual understanding यहाँ पर. Either take pre-acquisition profit after dividend, or you can deduct directly minus dividend from the date of acquisition. So this will become INA on the date of acquisition. Understood? However, post-acquisition profit will not be affected. And now because dividend is not received by the parent company, no adjustment will be done in the other equity. Got this point? Have you understood, Haridarshan? Now, in case Haridarshan is asking one more question, sir, in case we are associate before becoming the parent, sir. Acha, you are asking about November 2023 question. Am I right or not? You are asking about November 2023 question. What I will do, that November 2023 question I will do separately for you, because right now if I will explain now, you will be confused. You will be totally confused. Correct now. So one day I will take that November 2003 November 2023 question separately for you. Haridasan, is it right? Because right now, if I will say now, you will be totally confused. Because for that, I require the entire question. One question I require. Got this point? Yes, sir. Chalo. Thank you very much, Hare. Then Mohan Kumar, sir, in days 116, in remeasurement of lease liability, how to find which discount rate to be used, revise or original rate. देखो in this थोड़ा सा you need to do memorization. So whenever there is a remeasurement, so remeasurement can be of different cases. First, there can be remeasurement of lease term or remeasurement of purchase option price or remeasurement of variable lease payment or remeasurement of residual value guarantee. Correct now. So this can be, there can be different cases for remeasurement. Only in these two cases, whenever there is a remeasurement of lease term and remeasurement of purchase option price, will use revised discount rate. Will use revised discount rate. Otherwise, will use always what? Always what? Original discount rate. So only be, I will say, just memorize this point from examination purpose. Ki whenever there is a reassessment of lease term and reassessment of purchase option price, then we'll use revised discount rate. Otherwise, we'll use original discount rate. Chalega? Have you understood, Mohan? Mohan Kumar, is your doubt over? Bolo. Then come to next Vivek doubt. Sir, if the dividend is given by subsidiary and if it is credited to retained earning of parent during consolidation, we give entry retained earning account debit to goodwill or net worth. ये कहाँ से पढ़ा भाई आपने? From where you have done this? One second, Vivek, I don't know what you want to say. One second, I am asking. Sir, dividend is given by subsidiary and if it is credited to retained earning of parent. During consolidation, we give entry retained earning account debit to goodwill or net worth. Net worth means you are saying INA. But if such dividend is created by parent to PL, no adjustment. I don't know why you are asking this doubt. This is 100% wrong doubt. Just try to. Dividend is created to retain earning of PL, both are same. Because if the dividend is created to PL, from PL it will go to retain earning only. So sometime questions say dividend has been created to retain earning. Means from PL it has been transferred retain earning. Or sometime question will say dividend has been transferred to PL. It is also same only. It will be transferred retain earning only. I don't understand what is your doubt. This is ultimately, I will say, not a correct doubt only. Just try to understand कि if suppose dividend has been, मेरी बात समझना, your doubt is only not correct. कि suppose this is profit and loss account, correct? Now I am writing by dividend. So this will become net profit. So suppose this is 10,000 and this net profit become 10,000 and this 10,000 will be ultimately transferred to our retained earning only na. So sometime question says if dividend has been created retained earning, it means they want to say it has been routed from PL to our retained earning only. Or sometime question say it has been transferred to PL. So both are same only. Understood? Have you understood your doubt, Vivek? I don't know what you want to say, because I have one thing I have understood that you have done from some other book or some other faculty, but this is actually not correct. Your doubt is not correct. Okay, sir, can I go to some other doubt? Vivek. Sir, for India's 1 and 5, each question have lot of text. I can solve, but ICAI answer as some much theoretical jargon. Is it okay if you write simple? Yes, just try to understand depending upon marks. Suppose this whatever question has been given in India's 115, now most of the questions are illustrations. Now when we say illustration, so they want to illustrate the concept by that particular question. So in that they have written many things. They have written entire thing. In exam we can't write down that much. We are not Paramatma, we are Atma. So don't expect that much from yourself. You don't expect that much. देखो just write on this. We all have our limitation. Just think that how much you can write. That much only you write. If you can write down, you can justify answer. Then okay. Suppose the question is of 5 marks. Can you write down that much? If that same question coming for 20 marks, write down that much. Correct now. But that this type of question will not come for 20 marks or 25 marks. This will be of maximum 8 marks. So you are only need to justify the Ind AS 115 question with the relevant provision. Just write on relevant text. Understood? Yes, sir. That is not. Even though if I am writing exam now, I will not be able to write down that much. Got this point? You should be smart enough to understand how much you should write down. Correct? Got this point? Yes, sir. Okay. Next point is what? But case. Okay, okay, okay. Jacob, sir, what I was mentioning regarding earlier comment of Ind AS 12 was in case of taxable temporary difference carrying amount greater than tax band, then it will be DTA, vice versa, it will be DTA, right? Acha, you are asking that when it will be DTA, when it will be DTA. Simple. I will say from examination point of view now. So you need to remember me. You are asking that for that particular principle, correct? So just try to. I'll just give you one way to how to remember that. Right now, don't ask me the concept. Okay, don't ask me the concept. Whenever a question of Ind AS 12 will come now, you always draw this table. Always draw this table. You will never do mistake. In this case, write down first asset. यहाँ पे लिखो liability and first write down taxable temporary difference और यहाँ लिखो deductible temporary difference. ठीक है, तो prepare always table in this way. Correct. Only now you need to remember one thing. If for asset it is carrying amount more than tax base, so it is taxable temporary difference. Correct. You are only asking about principle now. When it will be DTA, when it will be DTL, when it will be taxable, when it will be deductible. That only you ask now. So only remember this. So just draw this table. First asset, then liability, then first taxable, then deductible. And just remember one carrying amount is more than tax base. Then reverse. इसको reverse कर दो. यहाँ कर दो carrying amount is less than tax base. यहाँ कर दो carrying amount reverse. This also reverse. Carrying amount is less than tax base. This also reverse. Carrying amount is more than tax base. So this become one formula. So in exam, whenever a question of Ind AS 12 is coming, now first draw this table and then do the question. So right now I am just explaining from examination point. Right now don't ask me the concept. If you do any question by using this table, your answer will be correct. Your answer will be correct. Understood? I have just given one shortcut. Jacob, have you understood? Yes, sir. Mamta. Sir, how treatment would be when accounting policy and accounting estimate are different of parent and subsidiary while consolidation? Because till now they have not given any question of this nature. If there is some accounting estimate difference, so for that no adjustment is required. Only adjustment is required when there is some accounting policy difference. Now you know what is accounting estimate, what is accounting policy. For example, just try to understand. For example, parent company is using SLM method of depreciation for PP, and for PP means any class of PP. For example, for building they are using what? For building, parent company is using what? SLM, and the subsidiary company is using suppose RBM. So this is accounting. This is what? Accounting policy or accounting estimate. So this is accounting estimate. For this no adjustment is required. If there is some different accounting policy adopted by subsidiary company, for example, if suppose parent company is using first in first out method for inventory valuation and subsidiary company is using weighted average price method for what? For inventory valuation. Now just try to understand. As per weighted average price method, suppose the stocks is 20,000, but as per FIFO the stock will be 25,000. Stocks will be 25,000. So they should just convert the inventory from weighted average price method to FIFO, and that adjustment is required. So of course you will increase the stock of subsidiary company from 20,000 to 25,000 before consolidation. So that information will be given. Just adjust it, and that difference will be transferred to retained earning. So the difference you transfer to retained earning. So any adjustment will be done with the corresponding equity, and then consolidation will start. So once you do this adjustment in the books of financial statement of subsidiary company, after that consolidation will start. But till now no question of this nature has been given in ICAI study material. Therefore we don't expect this type of question in exam. But you don't know, you can't, you don't know about ICAI. ICAI can always change the trend. Okay, chalega? Yes sir. Can you share your contact number for asking doubt? Arey baba, contact number don't ask me. I'm coming every day na baba. I'm coming every day. If देखो just try, if you message me, that point of time I will not ask. Just if you message me any doubt, that message I will not see only. Correct now? Because I'll be busy entire day with some other work. So therefore I have designed this live doubt session so that you can come at this point of time and ask me all the doubts of whatever nature. This will help you, and this will help others also. Your doubt will be spread to others person also. Correct? Yes sir. Then Jacob, in case of deductible temporary difference, carrying amount is more than tax base, then it is accounted as DTA. In case of, now you need to say me, you are asking about asset or liability. Already देखो, this I have already explained. This you have understood now, Jacob. Okay, Jacob, you have understood. So I am not explaining this mind. Mamta, can you explain journal entry while subsea sale inventory and machinery to parent, or vice versa? What? Can you explain journal entry while subsidiary sale inventory and machinery to parent? Means you are asking about downstream transaction and upstream transaction. Okay sir. Now coming to, means just try to understand, when there are two type of transactions, the parent, subsidiary. The parent has sold, so this is known as downstream transaction. We call it what? Downstream transaction, from parent to subsidiary. So it is going down. And when subsidiary has sold to parent, we call it upstream transaction. Correct? So let me take one question only. Suppose parent, subsidiary company. Just try to understand. The parent has sold to subsidiary. So parent, let me assume cost price of the inventory is 1 lakh and the sale price is 1,20,000. So this become what? The profit is equal to 20,000. So this become the cost price of the stock in the books of subsidiary company. Correct now? And suppose this remain unsold. So this 1,20,000 include profit of which company? Profit of parent company. That required elimination. Correct? Now from consolidation purpose, what journal entry will do? Because this is the profit of parent company. So the profit of parent company has been transferred retained earning. The profit of parent company has been transferred retained earning of parent company. We will do one direct journal entry. Retained earning account debit to what? And this profit is included in the stock of what? Subsidiary company. So that stock in consolidated balance sheet will also reduce by 20,000. So we will say stock. Stock means inventory, to inventory. Understood? So this can be one journal entry, but this is the net journal entry only for preparing consolidated balance sheet. I am assuming that they are not asking consolidated SOPL, and normally in ICAI exam they don't ask consolidated SOPL. They will ask consolidated balance sheet. So this will be the net journal entry. Understood this point? Now if I am saying subsidiary has sold to parent company, so same example I can take. Cost price is equal to 1 lakh, sale price is equal to 1,20,000, and the profit become 20,000, and this become cost price of the inventory in the books of parent company 1,20,000. Now this 1,20,000 include profit of subsidiary company. So profit of subsidiary company we need to eliminate. Now profit of subsidiary company will belong to two owner. One is parent company and one is non-controlling interest. Correct. So in this case, you need to give effect in two parts. Means can I say profit of subsidiary company which is attributable to parent company will be transfer retained earning. You will decrease retained earning to the extent of parent company share, and balance will be debited in NCI. Account debit with NCI share, to what? Stock. So stock means inventory in the balance will reduce by 20,000. Suppose parent company share is 80%. You write on 80% of 20,000, here 20% of 20,000 and then 20,000 stock. So this will be the effect in consolidated balance sheet. Understood? Of course, Mamta, in ICAI the journal entry is different. That they have given from consolidation point, consolidated SOPL. If you want that journal entry, I can give that journal entry also. We just try to understand. This is a net journal entry to prepare consolidated balance sheet. Correct now. Right now, you need to ask me from examination point of view. Now, if they ask journal entry, just try. We need to eliminate the entire transaction now. So just try to understand. The parent company has sold. Goods. Correct. So it is a transaction of parent company. So sale transaction of parent company will be eliminated. So I am explaining from ICAI journal entries point of view. So what will be journal entry? Can I say sales of parent company will be eliminated by 1,20,000 and the cost of sales of parent company will be eliminated by 1 lakh. Correct. यही तो entry है. And the net effect is the profit of parent company how much? 20,000. So of course in SOPL sales will be eliminated, cost of sales will be eliminated, cost of sales will be eliminated. I hope you have understood. And the difference will be what? Inventory. From inventory 20,000 will be eliminated. This was the journal entry. Ultimately in balance sheet, the sales minus cost of sales is the profit of parent company, and that profit of parent company is ultimately transferred retained earning. Therefore, I have given retained earning account debit to inventory. Understood? Have you understood now, Mamta? Mamta, your doubt is over or not? Mamta, I think you have done classes from me or not? Because in my classes I have explained everything. Mamta, have you listened my classes or not? Chalo, let me go to some other doubt. Mamta over Vivek. Sir, in November 2023 question, goodwill of subsidiary company taking by parent for consolidation is fundamentally wrong. Of course, in my video also I have said that is wrong. Correct now. This November 2023 I will explain in some other video. Correct now. Some other video. So give me some day. I will come with that video. Already I have explained when I have released my suggested solution. Correct now. But ICAI has given some other solution. So I need to explain now ICAI solution to you. Correct now. Understood. So if you want to listen my solution November 2023 suggested solution, I have already released before ICAI suggested solution. Correct now. If you want to go through that, you can go through that. That is conceptually wrong. Yes, 100% you are correct. Vivek, you are correct. 100% you are correct. ICAI was wrong in that point. Correct. I should not say ICAI is wrong. ICAI suggested solution is wrong. Correct now. I will take my words back. ICAI is not wrong. ICAI suggested solution is wrong in that part. That solution is given by some chartered accountant also. So that chartered accountant has given wrong solution. ICAI has not given wrong solution. ICAI suggested solution is wrong in that case. Okay. Because there can be sometime mistake. Hota hai. Ignore that right now. Okay. Mamta. It means subsidiary will continue their method of valuation of inventory in SFS. An adjustment required each year only in CFS. 100% Mamta, you are correct. Adjustment is required only in consolidated financial statement, not in individual financial statement of subsidiary company. 100% Mamta correct. Means whatever adjustment we are doing for that, for changes in accounting policy, for using uniform accounting policy, that is only for what? Only for consolidation purpose. Then what is given? Next doubt is about Kirti. Sir, in DS 103 AX and BX problem, can you explain PC calculation step, logic under common control? Chalo, I understood your question. AX and BX. Now, in AX and BX wala question, if you remember AX and BX question of 103 about the common control, in that, just try to understand, because in that question they have said the requisite number of shares will be issued by ABX Limited. ABX is the company which will form after amalgamation of AX and BX. This was the question. Correct. Now, under common control method, business combination under common control, we use Appendix C to Ind AS 103 and we use pooling of interest method. Under pooling of interest method, all assets and liabilities are incorporated at book value. Correct. And reserve and surplus need to be retained. Reserve and surplus need to be retained. It means first you need to find out total net asset of AX and BX. AX and BX. Correct. Understood. At book value. At book value. Understood. So guys, this is nothing but total equity to be shown in the balance sheet after business combination. This become total equity. So all asset at book value, all liability at book value. So all asset minus all liability will be total equity. Now out of this, can you see we need to maintain the reserve and surplus. So reserve and surplus to be maintained will come. So minus कर दो all the reserve and surplus given the individual balance sheet of AX and BX. उसको minus कर दो. So this will be, can you say total equity share capital? Total equity share capital. So this will be total equity share capital in the balance sheet of acquirer. Acquirer means ABX Limited. Acquirer means in this case it is transferee company in case of business combination under common control. Now this become total equity share capital. Understood? Now we'll divide this total equity, correct, now by the issue price of equity shares to be issued. Now in that question issue price was not given, so we'll always assume at par. So we'll assume at par, I think it was 10. So this will be number of equity shares to be issued. Number of equity shares to be issued to AX and BX. This will be the number of equity shares to be issued to AX and BX, and this will be allocated to AX owner and BX owner. This will be allocated. Now from my point of view, this allocation should be done in the ratio of fair value of net asset. Fair value of net asset. This should be allocated to AX and BX in the ratio of fair value of net asset. But ICAI has allocated in the ratio of book value of net asset. So you also use this concept only. The entire this equity shares, the total number of equity shares will be allocated to AX and BX in the ratio of book value of net asset of AX and BX. Understood? Correct. So this allocation has been done in ICAI solution. I have explained from ICAI solution point of view. Have you understood this? Bolo. Kirti, your doubt is over or not? Now, so this is what in ICAI solution they have done directly. I have explained the concept. Concept you understood. First, find out total equity. Total equity is nothing but total net asset to be incorporated at book value. From that minus reserve and surplus to be maintained because pooling of interest method require that. So this become total equity share capital divided by issue price. This will become number of equity share to be issued to the AX and BX owner. AX and BX owner. Then allocate in the ratio of book value of net asset of AX and BX. However, it should be fair value from my point of view. Means from my point of view, ICAI solution is not correct in that regard, but will follow ICAI solution in exam only. So you also do at what? In the ratio of book value only. Got this point? Yes, sir. Coming to Mamta again. Sir, can you use net journal entry in case of downstream? Yes, when you are preparing only consolidated balance sheet. Just right now, if they ask journal entry question, then do as per ICAI journal entry means sales account debit to cost of sales to what? Inventory. Then do that journal entry. But normally that type of question they are not asking. But in MCQs they may ask that type of questions. Correct now. So if they are asking that journal entry, if they are asking journal entry, then do that journal entry. But if they are asking only CBS, then you are not passing journal entry, you are preparing working note. Now in working note, we give the net effect. In working note, we give the net effect. Understood, Mamta? Have you understood? Bolo. Have you understood this point? Bolo. Up to this, any doubt? So I think all the doubt is over. All doubt I have taken for today. Any more doubt? I hope you are enjoying this doubt session. Correct? Do you want me to come every day? Bolo. Do you want me to come every day? You all are my student or you have taken classes from some other faculty? Bolo. So do you want me to come every day till exam is there? Of course, I am there to support you only. One more point to inform you that I'll be doing everyday case study also. One case study I will take every day. Till now I have not. Uh, Till now I don't know at which point of time I will take one case study, but it may be what before this doubt session. So I may come first for case study. Each day I will take one case study so that every day one case study is also done. Correct? I think that will help you. Am I right or not? Very good. How you are liking my marathon classes? How is the marathon classes? Tirthi, how you are liking the marathon classes? Are you able to understand each and every concept, Kirti? So time is also up. So what we'll do, we'll meet tomorrow in the next out session. Till then, bye bye. Take care. Enjoy your remaining day. But keep studying. Keep studying. You are not going to sleep. I'm going to sleep. Correct? Yes. So happy study to all of you. Enjoy your study. This is a time to enjoy your study. Correct now? Means I will always say that if you enjoy your study now, so your that will come to some comfort zone. And when you are in comfort zone, now your output will be more. Your output will be more. Just enjoy it. Sometimes just try to understand. We are not just try. We are not Paramatma. So we can't be perfect. And ICI also don't require perfection because ICI is demanding 50%. If I say perfection for perfection, 90 or 95% is required. Correct now. So perfection is not required. So when there is no perfection, why you are taking so much tension? You know why we actually do not score in exam? Because we have self doubt about our performance. We actually doubt about our performance. We sometimes think more that we will not be able to perform in exam. Why will not be able to perform? You have passed your class 12 exam, you have passed your CA foundation exam, you have passed your CA inter exam. So of course you will pass your CA final exam. Who can stop you? No one can stop you. Only you can stop yourself. Correct now. So always enjoy your study. You'll come at some comfort zone. Sometimes there is some bad day. You may not be able to study or you are not able to understand one concept. Chalega na. Because perfection is not required to become CA. Believe me, perfection is not required. Even the rank holders are not getting 90%. Correct now. In some of the subject they are also not perfect. So in all subject we are not supposed to be perfect. Only when to score what 50%. So be calm. Don't be panic in these coming days. Have faith on yourself. Don't doubt about your ability. You all have a you all have a potential to become CA. You all have potential to become CA. Correct? Only this I will always say this exam is mere formality. Just write down exam and become CA and come to CA fraternity. Correct? All the best for your preparation. Bye bye. Love you all. Thank you very much. Bye bye.